Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny for the Dividend Diplomats. Guess what, everybody? Time for another watch list here as we close out March, head into April. 3 undervalued dividend stocks to buy coming your way today.
Guys, smash that subscribe button. Give Bert, the Hurt, and Lanny a nice thumbs up. We are here. We're almost hitting that 13,000 subscriber mark. We're pumping out dividend stock analyses right here to help you on your investment journey, as well as that journey to financial freedom. Because Bert, the name of the game here on this channel is building that passive income stream through dividend stocks.
That is absolutely right. And as the market continues to be crazy, it's up, down, snip, snap, snip, snap, snip, snap, as you are right, Lanny. It doesn't matter. You ignore the short-term noise. You focus on the long-term goal. The long-term goal is buying those companies that have built and grown that dividend income stream through good times and bad, so you can sleep night as the market does its chaos.
You know, sleep is good for the soul, and less stressful sleep is obviously the best, and that's what dividend stocks do. Now, Bert, the S&P 500 was up about close to 2%, I believe, for the week, crossing officially above 4,500, getting closer to that all-time high again.
I know, it's kind of enjoying our videos over the last few weeks where we are talking about the market being at 4,200, at 4,300, trending in the other direction. This week, went back in the other direction. It pulled some wool over our eyes and crossed back over 4,500.
So back-to-back positive weeks for the S&P 500. Now they're only about 250, 260-ish points away from that all-time high ceiling again. That's what the Dividend Diplomats are here to do. Regardless of what the stock market is doing, regardless of what the inflation numbers, what the Fed's interest rate is for the overnight Fed funds rate is, whatever's happening in Russia or Ukraine, we're here to find you guys undervalued dividend stocks to buy. And I think, Bert, you've put this solid list together. And how did you get it to those 3 stocks?
Yep, it was just random. Throw some darts on the wall, see what balloons popped and what stocks came out.
Okay.
I'm kidding, everybody. The Dividend Diplomats dividend stock screener. 3 simple metrics. 1, PE ratio less than the S&P 500. 2, payout ratio less than 60%. Perfect payout ratio, 40 to 60%. Don't you forget that, everybody. That third metric, dividend growth history, 5-year average dividend growth rate, and how long has a company increased its dividend. Those are the 2 things we look at with that metric. And then there's that bonus metric, the dividend yield. That's what we look at every time we build a watch list, every time we buy a stock. We are running a company through our stock screener.
And Bert, I noticed this stock watch list that, you've put together here, stocks that you're looking to buy towards this, finishing up March and heading into April, which is wild. I see you own one of these 3 stocks currently, right?
That is correct.
Wow, I'm liking it so far. Obviously, the one stock has taken a massive beating recently, I believe, because of their business with Russia. Mm-hmm. But that also may have provided a nice opportunity to buy an undervalued dividend stock or stocks here.
That's an excellent segue here, Lanny. So let's just start talking about this first company, because it was number 1 on my watch list, because we did start building a position at the end of last year and the continued building right now, especially at its current prices. That company is Unilever, ticker symbol UL. Is it going to be this way on the video? We'll find out when we see how it records. That's right, Unilever, the consumer staple giant, headquartered in Europe. They've got Dove. Man, I'm missing so many of them. I try to do it off the top of my head, and I cannot remember it right now. Who cares? They have a lot of great consumer staples. We'll put the picture up here on top of the screen. Company has taken a beating because of inflation, rising costs, because of the impact that the Ukraine and Russia saga is having on the European market. It is down 20% over the last 52 weeks and nearly 17% year to date.
Just taking a beating, and obviously that price to earnings ratio has come down. The dividend yield has gone up. But the key piece right now is, what do the analysts expect from earnings? Is the stock undervalued? And Bert, I think the community is surprised you didn't talk about your favorite, Hellmann's mayonnaise from Unilever.
Oh, I thought that was just a given. When you think of Unilever, you think of mayo. That just rolls. I didn't even need to say it. It went right to your mind.
Right to the hips. All right, so Bert, ticker symbol is UL. they closed at $44.90. When you dive into that first metric, that price to earnings ratio, Bert, I think I see where you're going with the stock and how it's on your watch list already.
Do you? Well, earnings are 285, P ratio 15.75. Markets between 24, 25, probably now a little bit above 25 based on the increase this week. Huge discount compared to the broader market.
Yeah, I'm looking and I'm liking. But now, Bert, the question is what's that second dividend metric look like on the safety of the dividend here?
Second metric, payout ratio, annual dividend, about $2 per share based on the currency exchange rate, whatever you want to do it. We just use 2. Seems about right there, plus or minus 1 cent based on your source. Divide that by the 285 EPS, that gives you a payout ratio of a little above 60%, 70%.
So, keep in mind here, usually these consumer goods are lower growth, kind of reminds you of Procter and Gamble, even though Procter came out with a banger of an increase last year at 10%. Unilever, obviously it's got a lot of headwinds. Who knows what the impact's going to be on earnings, but hopefully that's already reflected in the stock price and in those earnings projections. Not afraid about the dividend, but dividend growth looks dismal right now.
Yeah, no, I think that's fair. It's something to keep an eye on, especially if there's a major issue that's going to cause earnings to plummet over the next few years. The dividend growth will slow, but it's something to keep an eye on. In the meantime, there still is room to continue some smaller dividend increases along the way. Moving into that third metric, the dividend growth history, their 5-year average dividend growth rate is just over 7%. And finding the number of years that they have increased their dividend in a row is difficult because of the currency fluctuations. It's been trending upward for a long time. I'm just going to slap in there 11 plus years for a dividend growth history. They're working their way towards aristocrat. You zoom out that Unilever map, you can see a long-term history of that dividend going up.
Yeah, Bert, you'll include that here in the video here so you can see the trend upwards. But looking at now that bonus metric, that dividend yield, obviously the stock price has been pummeled down a few dollars per share. At $2 and paying a dividend over that 44.90, you're looking at a dividend yield that's approaching 4.5% at 4.45%. Well over 3 times the S&P 500, brother.
Look, that's what you want to see here with a company like Unilever, slower growing company, slower growing dividend. You want to see that higher dividend yield to help compensate for that lower growth. Unilever close to 4.5% has me really watching that company. So I can summarize them here quickly. Unilever, 15.75, payout ratio 70%, 5-year dividend growth rate 7%, history of increasing that dividend over the long term, and a yield of nearly 4.5%.
Wow. All right. So guys, that was Unilever. Let us know in the comments what you think about them. But let's get into that second dividend stock, brother. We're talking about the big brand company. We're talking about a company that owns Vans, Supreme, North Face. Bert, what's this retail brand type company?
VFC, VF Corp, ticker symbol VFC. Yeah, the consumer staple giant has always kind of been off my watch list, but they are on the verge of becoming a dividend king, Lanny. They are a retail company that is almost a dividend king. Their stock price has come down, even more so than Unilever during the year. They are down 22% year to date and 28% over the last 52 weeks. Numbers like that are going to catch my eye, especially with the strong consumer brands, the very loyal consumer clothing brands, nonetheless. Of course, it's going to catch my eye, and especially when we run them through the stock screener.
Now, one thing to keep in mind, they did spin off the Contour brand portfolio, which is your Wrangler, Real, Comfortable, James, Lee, and Rock and Republic. So some pretty big branded denim wear, I'll call it.
I will always think of Brett Favre when it comes to Wrangler, just those commercials.
That's right. Got to throw it up to good old Hattiesburg, Mississippi, producing Brett Favre. So, Bert, but yeah, you're right. The stock price has actually been punished even more than Unilever. Mm-hmm. In fact, yeah, like you said, VFC is down almost 30% in the last 52 weeks. They're now at $57.37. Looking at the metrics already, I could see why it's hot. It's hot on your watch list.
And I don't have a lot of clothing, a lot of retail in my portfolio either. So I think this could potentially be a great opportunity to slowly build a position in a sector, in a company that you typically don't get at these levels. Should we jump into the stock screener here, Lanny, since you're so excited about it?
Guys, that first, yeah, let's go. Price to earnings ratio. Analysts are expecting $3.21 for this consumer good retail branded company here. 17.87 price to earnings ratio here for VFC Corp, which is, showing better signs of undervaluation here. But Bert, let's look at that dividend payout ratio as a second metric.
Dividend, $2 per share. Divide that by the 321, that gives you a payout ratio of 62.31%. Just a hair above that. I'm counting it. I'm going to give it a check mark for this. It's close enough to 60% to count.
Perfect. And yeah, Bert, like you were saying, that third metric, dividend growth, almost 50 years at 48 consecutive years of churning growth to the dividend, albeit the dividend growth rate on average over the last 5 years is about 5.89%. Similar, very close to the rate of inflation right now. Historically, that does beat inflation. So keep in mind, historically, that's way better than inflation. Yep. But again, pretty good combination factor right there.
That's right, Lanny. Their dividend growth over the last few years has stalled. The last 2 dividend increases have been 1 cent each. But prior to that spinoff, and several years ago, they were increasing that dividend like crazy. So it'll be interesting to see what they do here. Now, the best part here is the bonus metric here, getting into that yield with that price dropping down. Their yield is now 3.49%, round up to 3.5. So think about that, everybody. Let's run through the metrics here and just say it one more time. PE ratio, 17.8. Payout ratio, 62%. 5-year dividend growth rate, nearly 6%. Almost a dividend king at 48 consecutive years with a yield of 3.5%. In my mind, I look at this and say, dividend king yielding 3.5%, trading below the market, down over 20% year to date. It has to earn a spot on my watch list.
Yep, on BFC, guys, let us know if you've been buying BFC stock. Is this a stock to buy? Let us know in the comments. So, Bert, that was 2 stocks. We still got number 3. They're coming down the ramp, 10, 9, 8. They're running down. Here we go. We're talking about Whirlpool Corporation, ticker symbol WHR.
Yeah. Another one that popped up that is new on my watch list. I don't actually know if I've ever featured Whirlpool on my dividend stock watch list before.
We definitely have talked about their return or at least dividend increases, but never on a watch list here.
Yeah, that's absolutely right here. Lanny, I'm going to put you on the spot with one thing here. I just want to know, Whirlpool, their price is coming down, obviously. Let's call it out here. They're down 22% year to date as well, 18% over their last year. Let's just see, Lanny. Do you know what their recent dividend increase was back in the middle of February? Do you know what percent they increased that dividend?
Well, if you guys remember, they were paying $1.40, but then they jumped to $1.75. They increased it 25%.
There it is.
Yeah. Going into 2022, just a couple months ago.
Yeah. So it's not as if the company just announced a 1% increase, a 2% increase. They announced a 25% increase. That stock price continues to plummet. Seeing all of this, I'm like, you know what? I got to run this through the screener. I have to see, is this company an undervalued stock that deserves a spot on my watch list? So, Lanny, what do we need to do?
Well, before we do, I wonder if, they've obviously benefited a lot from the housing boom we've had in the last 2.5, 3 years. And obviously I need to see and peel back a few more layers here to Whirlpool. Is this a sign that building or supply chain is impacting Whirlpool, or are things slowing down in real estate? I'm very curious here. But you're right. We're looking at the Dividend Diplomats stock screener metrics on Whirlpool. Again, ticker symbol WHR. Bert, they're trading at $181.38. And actually, their 52-week high was $258. So they're down over $75 from that 52-week high.
It's insane. When you go into Yahoo Finance and you look up the forward earnings when you're going through this, the number caused my eyes to pop out. Their forward earnings estimates are $26.64. Therefore, the PE ratio is only 6.81.
I mean, even if you took that forward EPS and just cut it in half, we're still looking at a below 14 price to earnings ratio.
Yeah. still, to your point, yeah, you cut the EPS in half, and they're still less than half the PE ratio of the S&P 500.
Well, let me look at that second metric. Something's got to be up with the payout ratio, right? So let's see here. So you take that, all right, they pay a nice annual dividend, it reaches $7, $1.75 times 4. And guys, that payout ratio is at 26.28%. And again, even if EPS was actually half, you're actually still in the perfect payout ratio range at 52, 53%. So based on estimates, you're at 26%, extremely safe. Based on a very conservative, cut everything in half approach, you're still 100% safe here.
Yeah, let's look at that third metric, the dividend history. 5-year average dividend growth rate is 8.48%. We already talked about that 25% banger of an increase already for 2022. They've increased that dividend for 11 plus years. They are nearly halfway towards becoming a dividend aristocrat.
Well, guys, to look at the dividend yield now, because that price has dropped like a brick, the dividend yield is 3.86%. So higher than VFC Corp, slightly lower than Unilever, but 3.86, definitely a premium to the overall stock market. And to summarize here, you're looking at a PE ratio below 7, a dividend payout ratio below 27%, dividend growth rate well above 8%, beating inflation, and an above average dividend yield.
Yeah. So, it's easy to see why Whirlpool hopefully made it on my watch list here. I'm not going to go through each one of the metrics here. We'll just put up the chart here. The 3 companies on my watch list are Unilever, VFC Corp, and Whirlpool. Those are the 3 companies, all showing signs of undervaluation compared to the market, all with strong dividend yields. The lowest on this list is VF Corp at 3.49%.
Or what stock are you looking to buy right now out of these 3? Rank them for us.
It's interesting. I've been hesitant to initiate new positions this year. I've not wanted to. So obviously, Unilever is always going to take the cake from that standpoint. That being said, VF Corp is making a very strong case to have a new position in my portfolio, because if I am going to initiate a position, I want it to be a dividend aristocrat. I want it to be a dividend king, a company that I don't have to worry about for years to come. But heck, Whirlpool even, man, they're coming in out of nowhere, landing off the top rope, flying in here. I like Whirlpool. I'm going to keep an eye on them. If their yield hits 4%, which would put it at $175 per share, only $6.38 away from that, I will have to at least buy 4 or 5 shares of Whirlpool. It'd be nice to, if I'm going to do it, I'm going to try and get to a position of $1,000 plus quickly in VF Corp or Whirlpool, because I don't want to do a small position.
Yeah, you got to go hammer, right?
Yeah, but I like all 3. So I'd say most likely immediate, Monday, Unilever, VF Corp, Whirlpool, not bad. VF Corp, the other interesting piece of them is their ex-dividend date still closer towards the end of the month. So I still have some time to buy VF Corp and capture that dividend.
All right, guys, there you have it. Who do you like out of these 3 dividend stocks? Are you buying these dividend stocks right now? Which one's your favorite? Let us know in the comments. Definitely give this video a nice thumbs up as well, as we try to reach the millions and millions of dividend investors out there on this channel. Bert, what else you got for us, my brother?
Nothing, Lanny. Let's keep crushing everybody. Why don't you send all these diplomaniacs off?
That was Bert, the Heart, and Lanny from the Dividend Diplomats. Over and out.